The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 23rd wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon on this wonderful Wednesday. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044 inside the Tiger's Den. Go ahead and ping away. And, of course, you can send me an email, steve@tfnn.com. I'll do everything I can to get to your question. So let's go ahead and get this show started on this wonderful Wednesday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 20 points. She's trading at 17,562. S&P is off 7, trading at 2,042. NASDAQ Composite off 36 points, trading at 47.85. Russell 2,000 down 13, trading at 10.84. The DAX closed up 32 points. The FTSE closed up 6. Gold is off $25 right now, trading at 12.23. Silver's off 60 cents, trading at 15.28. Lots of movement inside the currency markets, all combining with regard to the euro getting weaker, the pound getting a bit weaker, the yen getting a bit weaker. Of course, those are the three top currency pairs inside of, you know what it is, the U.S. dollar index, and that's trading up 53 cents. That's trading out at 96.18. We'll try to go figure out where those are headed to. Let's take a look at things that are moving to the upside out here. AutoZone is numero uno to the upside, up about 1 6/10%. That's $13 and change. You've got Amazon up $7. You've got Chipotle up 5. Virgin America up 4. That's up 13%. O'Reilly Automotive up $3.77, a little bit 1 3/10% to the upside. To the downside, again, we took a look at this yesterday. Price line 1409 is what it's off today, trading at 1305. When we looked at it yesterday, we said this is going to head lower out there. We'll see. I don't recall what the price point was, but we concluded, both you and I, that it was going to head lower, and voila, there you go. Regeneron Pharmaceuticals off $8. That's down 2%. Tesla off $7. That's off about 3% out there. So, where should we begin? I guess the question is this a top? Is this not a top? How will we know? Things of that sort. How about if I just truly simplify life for you and answer that question? We're going to answer that question by taking a look at a couple of different charts out there. Oh, boy, that's you had to be a rocket scientist to figure that out, huh? The one chart that we're going to look at, I just have to figure out where I put it. Here we go. We'll put this up on our screen. Hopefully you're watching this on TigerTV. And if you are, you're going to be taking a look at really two charts, right? The upper portion or the upper panel of this chart that you're looking at happens to be the volatility index. This is the cash indice out here. The bottom portion of the chart is the S&P 500. Best to match these two together, just simply because of how the VIX is calculated out here. And if we take a look at it, this chart, this says that if the market has made a top, and we're getting close, we're definitely getting close out here. Is today the day? I don't know. I will know if today's the day if we see a close above resistance. You're going to see a black line on the chart for the VIX. You're going to see a black line on the S&P 500. This is data that I provide my subscribers with so that we can really identify what the market really is communicating to you and I. If we take a look at that VIX index, You take a look, and it's not a moving average. If we take a look at the VIX index out here, you can see that coming. Let me get my crosshair and cursor out here. You can see that once the VIX, that is, got below the that black line on my chart out there, that said, don't be long, be short. It's kind of like a market profile to a certain extent, right? You eliminate one side of the trade. In this case, you're eliminating either the long side or the short side. In this case here, once the VIX got below that level, that was on February 16th, that said, okay, do not be long the volatility index if you were going to be in that type of a trade out there. Now, those volatility ETFs, the caveat is they're not being calculated. Forget out, really, they are not being calculated based upon the VIX index. They're being calculated based upon futures contracts out there. But let's just use that combined with the S&P 500. The same day that the VIX dropped below that black line, you saw that in the bottom panel of my chart, you saw that the S&P 500 got above its little black line out there. That was a resistance level. So here is the deal. The market will, this is a freebie for today. These are the numbers you can write down for today. They change on a daily basis. They actually change during the day out here. So, but these numbers are good enough. Now, remember, a penny or two is not going to be a decisive victory for the bulls or bears out here. A victory for the bulls in the VIX index, that would indicate that we are seeing a change in trend. It's not going to tell us how long it's going to last, but that we have seen a change of trend and we have seen the top that formed out here, would be if the VIX index can close above 1492. I don't know if this will tell me. Well, I guess I can tell. Let's see. What was the high today? 1493. So 1493. So all that the VIX did intraday thus far, as of 1:12 p.m., was get up and test resistance. Rejected resistance. So it can travel sideways, get moved back. Doesn't necessarily mean that it's going to take out the seventh wave to the downside that was formed just 2 days ago. But it does mean that you do not have any kind of clear signal here that the market is ready to not crash, but ready to move down with any kind of significance. In the S&P 5, so 1492, is that when Columbus sailed the ocean blue? That becomes an easy number to remember out here. But let's take a look at the S&P 500 because its number is going to be slightly different. You'd like to see both in order to be able to get a confirmed sell signal inside the S&P 500. The S&P 500, the cash indices, says that you not only need to see a close above 1492 in the VIX, you need to see a close below 2033.12. If we don't see that, this becomes a support level. Last time that we saw this line test, we've seen it tested really the 2 different occasions thus far. Once was on February 24th. Price moved down at some point in time during the day out there. Then went ahead and continued moving higher. We saw a test of this level back here on March the 10th. You can see it both on the VIX and you can see it on the S&P 500. You can take this one to the bank, folks. That this one, if we do see resistance of the VIX fail, support of the S&P 500 fail, that's telling you that you absolutely have a change in trend that is beginning. Otherwise, we don't. It's really that. So I've made it so simple. I don't even know what it is that you and I are going to do here for the next 45 minutes or so, because I just gave you the entire recipe for the S&P 500. Now, well, let's go put the icing on the cake out here. We can do that. And let's ice it with a couple of different flavors. How about if we ice it with the Russell 2000? Maybe we throw in a little dash of New York Stock Exchange, maybe even the Wilshire 5000. So let's go. One of those will be the candles. The other will be cake. Hey, I know what we'll do. One will be, because this is going to be a lemon cake. I don't know why lemon, but let's ice it with coconut icing out there. That's my favorite cake. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 9 right now. S&P is off 5 points. So let's take a look at the week link out here. So we looked at the S&P 500. You and I could not have more clear delineation with regard to when a top would form today. So I don't know how the market's going to close coming into 4, but we do know two numbers that we're going to pay attention to that will give us a clear signal, not even a question mark left behind. And if we don't see any those levels get breached, well, the market will continue to move sideways to move higher out there, and those new numbers will regenerate overnight. You can check that out by just subscribing to Mastering Probability. So pretty easy thing to do. You can go to TFNN.com/Steve, and you can sign up for your 30-day free trial out there. Let's take a look at the Russell 2000, because Russell 2000, if we're going to take a look at the same black line, only a little bit different for its chart out here inside the Russell 2000. And the magic number here is 1084.30, which it's trading at. The exact price that it's trading at right now is, where are you? Is 1084.60. So just 30 cents. So the Russell 2000 truly up against a clear level of support. We can see that this little black line here has not been breached. It's been tested. It was tested here just a few days ago. That was up here on the trading session of March 16th. We can see that price has been moving higher, doing it with less relative strength out there. That's why we got that little black line across the top of my screen. We can see the last time that a bottom was formed out here, we saw that same pattern. That was back on February 11th. You can see that there was a bottom that was formed back here on September 28th. A terrific pattern that works on all time frames. I guarantee it works on all time frames, and helps us to identify market tops and bottoms. We can see in the Russell 2000, weaker than the rest of the indices, and that it has not broken above its declining tops line out here. But it would be giving us a sell type signal if we see it close today below 1084.30. Now, is the Russell 2000 going to be strong enough to go ahead and take the rest of the markets with it? No, but you would have another early warning indicator that the markets are really getting ready to top out here. So that's the message of the Russell 2000. It is the only indice that right now is sitting right at a level that is muy importante. If we were to take a look at the New York Stock Exchange, Says yes, SR, but I don't know how to phonetically say your name. Z, is it Zitau? I don't know because it's a. I was going to go to it. I have to give credit. Yes, Zitau. Okay. Well, we've got to give credit where credit is due. So let's go take a look at that Wilshire 5000 out here, and that is brought to us by our man Z inside of the Tiger's Den from the district of Gorlitz, I believe, is the city where that comes from. And we're taking a look at the Wilshire 5000. Now, the interesting thing here about the Wilshire is if we take a look at those wave counts to the upside, and this is coming off of the lows out here, so we have to say thank you, Z, for this. Coming off the lows out here from February 11, if we do our wave count, Z, today it looks like we're going to get a confirmed seventh wave move to the upside. What does that mean? That just simply means as we take a look at yesterday's high, does not look at this stage like it is going to be exceeded. Now, you can see a black squiggly line on my chart out here, and that is price point at 20,905.62. Now, that is about another 93 points or so south of where we're trading right now. So it'd be a heck of a sell-off coming in. But that would be a number. Here's a number that best represents the U.S. stock market out here. And if we were to see a close below that level, again, that number 2905.62, that would jump right on board with regard to with regard to a change in trend, where things would be headed to. So that's on the Wilshire. We took a look at the New York Stock Exchange. Did we or did we not? No, we looked at we did not do that. Let me see, do I have that out here on this chart? No, it's not on that chart. Where did I put the New York Stock Exchange? Is it on this chart? No, it's not on this one. I'll be a son of a gun. Well, I will find it. Oh, I'm right there. Here's where it is. I said I would find it. As we take a look at the New York Stock Exchange, right here is the number. So the number to be watching for inside and we can see here, price this morning came back and really tested that level that we're looking at. Let me go ahead and get my crosshair out here. That level, which is priced at 10,121.44. The actual intra-session low thus far has been 10,112. So we can see that level has been tested. It has been rejected at this stage, but the number you want to be looking for at today's close is going to be 10,121.44. What the New York Stock Exchange is also doing today, in essence, it's testing this little descending tops line out here that it broke through on the trading session of March the 17th. Now, that descending tops line goes all the way back to the high from May 22nd. Once price broke above that, it was a real good indication that the New York Stock Exchange, which we are now in the favorable seasonal cycle, had broken a level of resistance and said that over time it wants higher price. Now, we know that when we break above a level of resistance, old resistance should become new support. So you really got two things, in essence, that are lining up with each other. If this is going to be a breakout from here, you're going to see this level hold 10,121.44. Tomorrow then will be a little bit different than that, but we will see that hold. If price starts moving back inside there, closes below that 10,121.44 level, then you will have had a false breakout, and price can pull back to who knows where. We just have to take things one moment at a time, but the 9,600-ish level would not be a bad choice. So you've got the great thing about today and today's trading is that we have some really key levels of support that are being tested. And if they hold, that is communicating a big message to you. The same tool that we just looked at on those charts is really one of the tools, one of several tools that was giving me the huge, can I say huge? The huge sell signal inside of gold out here. Now, our skirts don't need to get into a tizzy just yet. Our skirts will get into a tizzy, and you'll see this thing really rock and roll once we see a close below the price level from February 11th. And that was where we had a nice big old breakout, nice wide-ranging bar, and that price point is 1197.50. That also happens to be right around our TAS weekly point of control at 1203. So 1203, 1197. Once we see gold get below that, you're going to see an avalanche of sellers that are going to be getting out of Dodge City, because that will have trapped, like rats, I say, that will have trapped everybody who believed that gold was breaking out and was moving to higher ground before it was going to retrace. The people who have been selling here are the large commercial traders. They may not be done selling inside this market. We have seen nothing but a sideways, in essence, action move inside of the gold contract ever since that February 11th cycle. That is, we're already March, 20th? That's like, 4, 5, 6 weeks, in essence, of buyers out here that could just simply get trapped. And when they get trapped, they realize that they're on the wrong side. That's when the floodgates will open. That's when you'll see volume really pick up to the downside. And where is price going to stop? I don't think it's going to stop at 1162. But we'll go ahead and play. I just don't think so. It's going to head lower than that. But we'll take things one day at a time. But that same set of tools, even during the Fed flurry, where price had moved higher, it never got above the resistance line out there. And some of you had sent me emails wondering if I had changed my opinion on gold when it had moved up $40, and the answer was no. It was just simply moving up into a resistance area. Why would I change my mind? Got to get above resistance. You got the Dow. She's down 23. S&P's off 7 points. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 18, S&P down about 7. A question came in and said, is there any reason why the market stopped where they did this morning? And the answer is, yeah, because there's a tool that works on all time frames and all products out there, and that's when price either moves higher or lower and does with less relative strength or weakness out there. It's just that simple. And as we take a look at a 10-minute chart out here for the S&P futures contract, you got a number of different patterns that were occurring. First, you were not necessarily in this order, but one of those patterns was a 100% move, right? You can see back here in the trading days about 4 o'clock in the morning on March the 22nd, as well as at about 10 o'clock in the morning on March the 22nd. We can see that here's your 100% move. We see where the bulls were lined up. You had a piercing candle, you had a bullish engulfing session. So price was coming down into a level that had previously held as support. It has held as support thus far. If we go ahead and take a look at the most recent high out here, I've got that occurring at about 2:50 in the afternoon. This is on March 22nd, and we start doing our wave counts to the downside. Well, it just so happens that at 12 noon, you got to a 17-inch stretch out there, wave G. And as price was moving down, it was doing it with what? Less energy to the downside. So that is really the reason. It's just natural, normal. You'd look at a 10-minute chart the same way you would a daily and a weekly and a monthly and a 5-minute and so forth. You just use the same set of tools out here, and you trade within that specific time frame. Now, what do we know about a 10-minute chart out here? Well, and we know that price has been able to, off of that bottom, price has been able to get above what? One of its horizontal lines of resistance out here. Its TAS market profile high. That is priced out at 2,032.75. We have seen here for the last 10, 20, 30 minutes, up until this last session that we're in, which is 130 to 140 now, we can see that price just really stalled out here by moving sideways, very small-bodied candles out here. Price now trying to fend off a level of what used to be resistance, and we'll see if that becomes support. So the number here is 2032.75. What happens if that level fails to hold that support? Well, then price will get back to the 2031 area. That happens to be your point of control. And if it gets below that, it'll go back and test the bottom at about the 2029 area. Now, this TAS market profile here doesn't provide us with really a whole lot of information other than where support and resistance and where the buying fest is at inside of this, because that point of control is really equally distributed between the upper portion of the box and the lower portion. So we don't have any real good feel here with regard to this box as to really who's in control. We can tell you price right now is in control, or the bulls, because it is up above a old level of resistance, and we'll see if it ends up being support out there. Now, what else is support? If we take a look at a daily time frame chart here for the ES Mini, what we're going to see is at the price point of 2031.75 is a brand spanking new daily box out here. Now that provides us with some good information. Now you can also see, let me go ahead and expand it out. Let me explode it up. Technical term, because we want to go ahead and take a look at it. So here's the little blue lines that you're taking a look at on my screen. And from a daily perspective, what we can see out here on this brand new daily box is price came down and is sitting after very close to that point of control. We can see pretty much an equal distribution, maybe a slight edge to the bulls out here as this point of control a little bit closer to the bottom of that box. So 2031.7, or was it 0.75 out here is a real key level of support as well. If in fact we see the ES Mini close below that on a daily basis, it says you're going to move down to the 2021 area. If you close below 2021 today, that is pretty much going to go ahead and mark a sell signal inside of the ES Mini. Why do I say that? I think I can. Let me see here. I do have it here. So that was taking a look at one set of charts with regard to the daily, with regard to the ES Mini out here. If we take a look at this little black line again, this little black line that should act as support, that's priced out at 2025. So you get to that 2021 area below a TAS market profile. Inside the ES below 2025, you will have key levels of support that had failed out there. Old support then ought to become new resistance, and that would be an indication that the sellers are gaining the upper hand out here. But until then, You don't have any kind of sell signal when we take a look at that daily charts out here. Intraday trading, a whole different thing out here. We took a look at why price stopped where it was. If you were trading on an intraday basis, you would absolutely want to be paying attention to that 10-minute chart. Why? Because that's the one that acted so well with regard to price stopping where it did and gave you the signals, or at least the signals that we like to take a look at to help us identify market tops, market bottoms, and so forth out there. So that's the and if we take a look at the Dow futures out here, you're going to see the Dow also having formed a brand new box, and so prices right now trading at its point of control out here, which is priced at 17,447. Support inside the Dow futures is 17,341. You breach that level. I don't know that I updated my Dow chart out here. Let me look. I did not, so I can't really give you that number. But that's okay. We've got enough numbers. No reason to confuse anything. We've got enough numbers to reference that will provide us with a great indication as to what the market is doing. Remember, you don't have to sell the top tick. You don't have to buy the bottom tick. You just want that big old juicy burger. And at this stage of the game, the burger is not on the grill. Okay, let's see. What else can we go look at? Hey, let's go take a look at some individual stocks out here. Let's go take a look at, let's go take a look at the U.S. dollar index. Let's go take a look at it, which really, as we talked about, the three primary currencies that are impacting the U.S. dollar index. You've got the euro, you've got the Japanese yen, you've got the Great British pound. Of course, our loony friends, the Canadian dollar, they're saying, hey, don't forget about us, as is the Swiss franc and the Swedish krona out there. And speaking of krona, I like mine with a lime. How about you? But let's go take a look at the euro, see what it is doing. Trade out at about 111 and change out here. So what has the euro been doing? What is it doing? It's certainly pulling back. If we take a look at these market profiles out here, they are as good as anything right now to provide us with a piece of information. We can see that price is trading with inside a box that formed out here on March 21st. This box here has a bullish sentiment to it. However, it doesn't get to be bullish in sentiment until price pulls all the way back down to those levels of support. Those prices being 1.103 and 1.108. So it looks to me like 1.108 is where the euro will continue to pull back to. And if it does that, that's going to put some strength inside the U.S. dollar index. If we go take a look at the Great British pound and go see what it is doing out here. Let's go ahead and get rid of these retracement levels, because that was for I was going to try to get rid of them. There we go. We got, what did I get rid of? I might have deleted the market profiles. Well, that's a darn shame out here, but as a matter of fact, I did. You son of a gun here. That's okay. We can go ahead and add it back in. I just have to go over to a different tab to do that. And I'll tell you what, I'll do that during the breakout here. But if we take a look at just what the Great British Pound is doing, forgetting about profiles out here, if it closes below this little junior swing point out here from March the 16th, that low is 1.4053. If you close below that, pretty good chance what this is going to do is go make a run for its lows from February 29th. And that's somewhere between 1.383 and 1.394. That too would go ahead and put strength inside the U.S. dollar index. We've got the Dow trading down 35, S&P's off 9, NASDAQ Composite down 38 points. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show. Dow's off 35 points. Before we went to that last break, we were taking a look at the Great British Pound. I've gone ahead and added their market profile to back to the system out here. We can see that price here is below daily and weekly profiles. So that just really confirming our message in trading without them. That says that price is headed all the way back down to the bottom out here, the swing point from February 29th. That is the most likely outcome at this stage. That will also put some strength into the U.S. dollar index, to the extent that the U.S. dollar index was the reason why I was taking the position that gold was a short. The answer is no. It actually had nothing to do with the U.S. dollar index. A little added bonus out there, perhaps, but had nothing, absolutely nothing to do with that. If we take a look at the Japanese yen, we can see that it also right now getting slightly weaker against the U.S. dollar. Where is this headed to? Maybe nowhere. Right now, what the U.S. dollar, what the Japanese yen needs to do is clear the hurdle of 112.96. If it does that, price likely headed to 113.72. That'll go ahead and put a little bit of strength inside of the U.S. dollar. What this doesn't suggest to us is that the Japanese yen versus the U.S. dollar is going to go lower, but in a pretty much a narrow trading range boundary area between 110 to about the 115-ish range out there. So all that looks good for a little bit stronger U.S. dollar. Gold, not the gold, but the light sweet crude. Light sweet crude back $1.32 right now. Let's go see what this thing is trading into. And we can see here that basically, so you had, this is a daily chart that we're looking at. So back on March 18th, I believe that was Friday. March 18th was when light sweet crude made its huge move right up to where the snipers were hanging out. That was the top of the weekly TAS market profile. That was up at 42.53. The actual high was 42.49. Missed it by 4 pennies out there. You got to love that. Now, price then, what did price do? Price was really, let's go ahead and explode this up just a tad because we can see. What price did at that stage, it bounced all the way down to both its weekly point of control and the top of its daily box, right? Nice level of support out here, held as support. Price moved just a tad higher. That was yesterday. And now today we are seeing a clear break of that point of control on top of that. Well, what we've got out here, Brandon, is really a brand new box. Let me just refresh the screen, make sure that that is correct out here. There we go. Yeah, we do. So brand new Boxeroonie. That suggests to you and I that light sweet crude will likely pull back into the price level of $39.29 to $39.62. You are trading right now at 40.11. That's where we'll get a release of information, because if we get below 39.29, not just get below it, but close below it out there, that would suggest that prices are going to move lower. Where would they move to? Excellent question. I'm glad that you asked me. At this stage here, the only information that we have to go with would be just simply retracements out here, retracements from the low to the high, and that would say probably 34.86. So you get below, what did I say, suggest 39.29 to 39.62. Then the next move would be down at about the 37.66. And if it breaks through that, 34.68 out here. But at this stage, just moving sideways. Nothing has really broken down, just price moving back to a level of support. It's not really an issue unless you see a clear break of that 39.29 level, and that is Texas T light sweet crude. So that covers really our commodities, our currencies, the markets out here. What should we take a look at? I guess it leaves us to go take a look at individual stocks, unless somebody in the den or elsewhere has got a message, and we go take apart some other individual stock. But let's go take a look at AutoZone. They must have been out with numbers. I guess maybe not out with numbers, but they're buying stock. Let's go see where they're buying it. Let's go see what they're doing with all of their cheap cash out here. You got AutoZone up 2%, up 16 buckaroonies. Looks like it's up towards its highs. Is this all-time highs out here? Let's put this on a monthly chart out here. AutoZone, yeah. So these guys are using that wonderful, free, inexpensive money out here and buying back shares up at the highs. You got to love it. So where is AutoZone headed to? Well, what a great question that is. Where is it headed to? It's not a bad looking stock chart. So it looks like higher price. It's up above all kinds of resistance. Let's put this on the daily chart now, see what's going on daily wise. So the last time that AutoZone was up in this area was back on November 6th, 370,000 shares. Today you've done 217. You were up here at one other time recently, March the 15th, with 251,000 shares. So you're moving into that area with volume. That has been somewhat of a consolidation top, double top, triple top, right? So if you can break above these areas, and it looks like you may have the volume here today, then you've got a price move. We just take a look at a measured move out here, potentially inside of AutoZone. You'd have to say, probably you don't have to say it, but I'm going to say it, probably somewhere between, so you got 694 to 803. Yeah, let's just do this. Let's heck with that. Let's just move it up above and see what it would give us as a price point. It gives you a price point projection of about $915 or so, and that is on AutoZone. A question, can we go take a look at platinum? Let's go take a look at platinum out here. Now, in the case of platinum, Danny, I just don't have the information, the type of information I have for gold and silver to really know what is going on there. But that doesn't mean that we can't figure it out or try to figure it out. I just don't have the same set of tools that would help you and I to figure out where gold and silver are headed to. Specifically, what is the big money doing? How have they positioned themselves out here? But if we were to just simply take a look at just normal charting tools, one of the things that you and I would notice is that today you've got a nice little key reversal session inside of platinum. What do I mean, a key reversal session? I mean that yesterday's high and low has been exceeded. That's number one. Number two, you're coming from an extended condition. Well, clearly, I don't know about clearly, but let's just make it clearly, coming from 810 all the way up to the $900 or $1,000 level. You've got A to B equals CD patterns here that have been completed. If we take a look at what those are, here's your A to B equals CD pattern inside of platinum. That's going to look like this. This ended up making a 1 to 2 A to B equals CD, which it did back on the trading day of March the 7th. It's kind of just been traveling sideways. You've got a clear bearish reversal signal here today. So that says that platinum should head lower. Where will platinum head to? Let's get rid of the A to B equals CD pattern out here. The first level of support that you'll find out. So the question was for a buy. Platinum ought to come and test the level of 947.50. to 951. So somewhere between the 948 to 951 is going to be a level. If it were to do it today as an example, that is not where it would stop. Why do I say that? Because you come back into a level of support with a wide-ranging bar, it's not likely to be where price is going to stop. But that becomes your first level of support. If it breaks or closes below those levels, then what you're really looking at is about the 921 area. And if it fails below that, then it really becomes 899. Now, you already know from my reading of what traders are doing, what the charts are communicating to us, that gold and silver, the individual metals, the mining equity is a whole different story out here, but the metals are going to get croaked. They're going to take people for a ride on the reading out there. That says to me the buy area then for platinum, Danny, would be down around the 899 level. That's what I would be looking at. And right now you're trading out at 960. Keep those hands in your pocket. This is T. Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 29, S&P is down 7. So let's summarize. What is it that we know? Well, we know that inside of the VIX index, here's what we know. We know that a key level of resistance has been tested and rejected. And that's the price point of 1492. That's when Columbus sailed the ocean blue. That also happens to be the price level that if the VIX does not close above it, there is no sell signal in the market from a daily perspective out here. And that's really what we're taking a look at as a daily perspective. We also know that the S&P 500, in its move down during the day, has not even gotten down to a level of support. It needs to close below 2033.12. So we know that you've got the VIX testing resistance, the S&P not even testing support out here. So the market is still, the message at the moment is still bullish. If we take a look at what's going on inside the Russell 2000, we know, which is a weak link, clearly the weak link out here. That is trading in essence right at support, 1084.30. The Russell 2000 could be the early bird special out here with regard to giving us the early warning as to what the markets may want to do. If price closes above 1084.30, price is just really testing a level of support. If we go take a look at the ETF structures for the indices, and we take a look at the Qs, looks to me like you're going to do, or it's going to do about another 18 million shares, similar to what it did yesterday. Did 18.8, the day before 17.2. So you've got some nice low volume out here. But candle-wise, when we take a look at the QQQ series ETF, we've got an A to B equals CD to the upside. It completed that yesterday, the 1-to-1. You've got an inside day. What does that mean? That means that you're traveling with inside yesterday's candle. And an inside day means that price will resume the trend that it just came from. If that's the case, then what the Qs need to do to confirm that for you and I is got to close above 108.07. That happens to be its TAS weekly level out there. It's weekly high. And if you can do that, then you can be looking at 110.63. What are the Qs doing? They're up against resistance. They've got no volume here. Maybe it just says price is going to trade sideways here for a few more days. And where do the Qs get the bearish? Easier for me to give you the number for the NDX 100. So why don't I do that for you? Drum roll, Johnny. That's going to be 43. I should say, drum roll, Stevie. Be Steve-O, because he's the one that's in the control room out there. We got to get a drum roll going. But in any event, prior to the drum roll, you need to see it close below 4379.32 inside the NDX 100 before you can actually turn bearish on it. If we and there's light volume across the board out here. The IWM, as an example, 22 million shares so far, probably going to do around 32 million. Yesterday, it did volume of 23 million shares out here. Now, we do have a bearish reversal signal. So on the sell the D point, we now have a reversal signal inside of the IWM. But let's just use that number that I gave you inside the Russell 2000 to confirm the sell signal. Because if we take a look at the POC, the point of control here for the IWM, we can see that that is where price has stopped as well. And that says even if it closes below, the IWM perhaps finds support at 106.15. Let's look at the finishes out by taking a look at the SPY. Maybe we can get the diamonds in here. But if we take a look at the SPY, see what's going on here. You've got volume today so far, 45 million. Maybe it does 65 million. Boy, extreme light day out here when it comes to volume. Yesterday, you had volume of 97 million shares out here. So you certainly cannot say that it is pushing lower with volume. Price here inside the SPY, no bearish reversal signal, no inside day either. Price coming down, but we know what to do for the SPY, right? We beat that horse by taking a look at the S&P 500 and the VIX index. In the case of the diamonds here, Lucy in the sky with diamonds, no bearish reversal signal. Price just trading at its daily POC, I mean, right on the number out there is what it looks like. That being 175.27. You're at 175.32. Folks, thanks so much for joining us on Wonderful Wednesday. I'll be back with you on Terrific Thursday. But in the meantime, stay tuned. Our polar bear, David White, is up next in the Tom O'Brien Show from 3 to 5. Have a great day. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.